recording. All right, cool. Just gonna give like a few more minutes just in case more people. I noticed there was a few people registered to coming in, so we're just gonna give it some time for them to coming in. Meanwhile, welcome. If you have an address, if you want it to get analyzed, you can drop the address like on the chat, so that way we can take a look and see what's going on with like the property, see what kind of strategy will be best fit for it, if it makes sense to like to even bring like an offer in, depending on what the criteria is in terms of it. But if you have a property to get analyzed, drop it in the chat. Or if you don't, it's perfectly fine. We're gonna leave all questions to the end of the series of the event of the live Zoom, I mean. So if you have any questions, meanwhile, either put them down on your notes or put it in the chat, but don't send it just yet, and then we'll get through that as well too. But if you have questions throughout the presentation, by all means, drop it in the chat. Trying to pull this thing up. Why is it not coming out? Whatever. Okay, that's there. The other one is not. All right. So welcome to another part. This is I think like 20 something, 22, 23 of their wholesaling analysis series. So this gets done every Monday, Wednesday, and Friday at 6 p.m. Pacific Standard Time. So wherever you're located, welcome. Thank you for joining. My name is Elton. I'll be the one hosting this series, and forever until maybe somebody else, I'll let somebody else host it eventually to host the series. But for right now, it's just me, just because I'm the one that started the whole series. So it's definitely good to get an insights of somebody who does wholesaling and also get into investing as well too. Just a little bit of background about me. I've been wholesaling for 10 months at this point already, in different markets outside of California. I just don't like California whatsoever. It's just too expensive. Awesome. Thank you for the address. But from there, where else? What else? Just a little bit more background about me. My background has been a lot in terms of like sales and marketing. So when it comes to like cold calling, reaching out to like sellers, agents, whoever it is, it's pretty easy for me to get across. I can't really speak for everybody's behalf. That they have some experience like that, but it really takes a lot of practice. But once you get like that first call in, if you're starting in your real estate wholesaling, it definitely makes it really interesting and fun to go moving from there. Not every property is going to be the same. Just how whenever you analyze a property, it's never going to be a pretty path at always. It's always going to be something always popping up. If it's not the seller, if it's not the agent, if it's not the buyer, it's the property itself. And then if it's if it's not the property, then somebody else around the process is going to be making a challenge. But that's how we learn in terms of like real estate. It's all from experiences, because it is going to be on a case by case basis when it comes to like analyzing and getting some deals done. So if you're starting on your journey, definitely just be consistent, be patient, and submit a lot of offers. Just get yourself out there, just because it really helps it out on expediting the process of you acquiring one deal. And there is going to be a lot of hard truths in the process as well too. So don't be scared of any of that. Just again, accept it, being a sponge, and then just continue learning and growing from that whatsoever. But other than that, that's a little bit back about me. That's a little bit motivation to provide to you guys some 2 cents. But other than that, I want to get started with this series, and let's dive deep into it. Dive deep into it. So the very first thing we have to understand about real estate wholesaling, it is going to be a business, just because it is real estate overall as well too. The entire process of real estate wholesaling, it is a fundamental of steps to take. There are major fundamental steps, and then all those major fundamental steps are going to have smaller steps to accomplish. So it is when somebody tells you like, oh, you can do wholesaling in 3 steps, yeah, it takes more than that. It's literally a full dive into it. to make sure that it really makes sense. Because again, not every property is going to make sense. Not every property is going to have the same square footage. Not every property is going to have need or require the same number of repairs. So it's going to be on a case by case basis. But again, if you want to talk about numbers, in reality, it's all about just getting yourself out there, and that's where the numbers are going to start speaking out in your side. But part of the series, what I learned on my journey is a lot of it, and still a lot of new wholesalers are getting into the business. Is part of that a lot of people struggle in is analyzing deals or analyzing properties. And what I mean by that is basically going through the process of how much can I get this property under contract for? Am I overvaluing it, undervaluing it? Why am I not? If I get it under contract, why is nobody, not a single buyer accepting my offers, or what's going on? Did I overanalyze? Did I underanalyze? Like, what's actually going on? So the whole entire series that I created about real estate wholesaling and analyzing, it's literally analyze the things that I've learned along the way, that I'm literally showing you guys my hard truths that I learned, and then from there just trying to share it with everybody. And even if you check the previous series, they are going to be available on my website. That a website is on my chat, on the chat. Head over to the educational series, and there's the previous ones. And so from my experiences, I'm just trying to let you guys know what you should be expecting. Again, not every single time that we coming live on this series is going to be the same case, so I can't really speak for it, because we're always analyzing different cities, different counties, different properties whatsoever. But it's all about understanding like the basics and little tips and tricks that I learned along the way, that's going to help you guys master the analyzing process, so that way you can submit offers that you are confident to bring over to the seller, to the agent, or whoever it is that you're working with, and make sure that your end buyer is actually going to be meeting at, but also let him know what information you have as well too. So we're going to dive into that. So first things first that we have to understand about analyzing is the ARV. Of course, you guys probably heard this across. If you haven't heard of it, it's perfectly fine. But what ARV it stands for is after repair value. This is the number one core foundation that all investors are going to need about a property if they're trying to fix and flip. Some buy and hold investors are going to be looking to find out as well too, so that way they can already pick up some equity, and also beyond that, maybe some profit as well too. It really depends. So it's all about getting to know like your buyers. But other than that, is the ARV, or the after repair value, basically states that what a property's value is if it gets fully updated. Basically, if we have a 1960s home, how much is it going to take to repair it to bring it over to 2024 standards? And how much is that property's value going to be at the new 2024 standards? That's basically what ARV stands for. Now the next is the estimated repairs and estimated percentages or strategies that investors are going to have. They are going to be very differently across the board. There are two major common ones, which is going to be investor number one and investor number two. These are the two most common ones across the nation. Again, there are going to be very slightly here and there, but that's perfectly fine. And then, of course, you are going to come across other investors that they like to dwell more on due diligence. They like to dive deep into like what's actually happening beyond that, or they do like the numbers. When I say beyond that, I mean that like the market that they're looking into, or maybe they have like specific numbers that they already used to like doing that. It's like, how is it that you came across those numbers whatsoever? And again, it's literally simply by asking how do they calculate the numbers, so that way you can understand how that end buyer is going to be purchasing your property or any other future properties that you come across that best fits him or her. All right. Or if it's a business, it's a business as well too. But first things first, we have to understand ARV. Now, of course, before even ARV, there's going to be repairs. So what the repairs are going to be, when I'm looking at repairs, I don't dwell too much on repairs. I just go based on start listing things like in my mind or in my hand. Okay, this property needs this property needs that. Cool. This. I start listing it, and from my experiences, I already got like a knowledge on what some property is going to need and roughly how much is it going to need. Across the nation, it's going to be very different. And there are going to be some states, California, New York, Florida, Texas, Washington, Massachusetts, the expenses are going to be a lot higher just because those states are going to be more expensive, not in materials, but it's going to be more on the labor side. But when I look at the square footage, I mean, at the repair per square footage, I like to stick to the average because whenever I like to bring investors, hey, investor number one, this property needs $30,000. That investor is going to tell me this doesn't need $30,000. This needs $60,000. And how'd you come up with that? Again, sometimes they like to like overinflate because that's part of their negotiation. Or two, they have somebody, their contractor, it's just always, again, it's hiking up like their prices or whatever it is. Or maybe it's somebody new that they're working with, so their expenses are going to be a lot higher than someone who, which is investor number two. Investor number two has a contractor that they've done business with multiple times, that they're able to bring their expenses down, even just like a little bit. So instead of being like a $30,000 repair cost, that investor number two is going to end up telling me that, look, I can actually get away with like $23,000 on repairs for like this property. I've seen it. It really, it really works for us whatsoever. And then of course it's going to be the realistic truth where the property is going to need like a full gut job repair, and then that one's going to be more detailed. Again, don't even worry about the detail, it's just stick to the average repairs per square foot, basically what all of these are provided over here. So light repairs are going to be very common on rental properties, single family or multifamily. These are going to be $10 to $20 per square foot. These are going to be either, if it's hardwood, maybe just double check that the hardwood is not splitting up, or if it's a carpet, but the rest of the home is hardwood floors, then it's just all about replacing like the carpet, if anything, or just changing the carpet. That's what like, some investors like to do. And then painting, just update the paint, very minimal stuff. Now, average repairs, now we're getting into a little bit more details. Now we start, again, that's where we start listing things, things like the kitchen. These are going to be the common areas that you get to start listing. The living space, the paint, the lighting, maybe even the windows, possibly the roof. Occasionally, it's gonna depending on what the year of the roof is. So these are kind of questions that I want to prepare myself whenever I'm reaching to sellers. Start getting details about what kind of condition the property is, or have them give you like what I like to call is a virtual tour of what the property needs. So like whenever you're calling sellers and like, hey, Mr. Seller, since you're interested in selling this property, can you give me like details about the property? Walk me through on what has been updated, what has not been updated. Like let's start from like the front door, like the windows and roof. Do they have they been updated at all whatsoever? Then you start walking into like the main house. So okay, as soon as I walk in, do I need to update the floors? Do I need to update the kitchen, bathrooms? And then you start going into details. So that way they're giving you a virtual tour on what the property actually has at the moment, because again, you're buying the property as is, or quote unquote buying as is, because you're wholesaling it to an end buyer. But again, that's information that you can provide your end buyer, so that way they can kind of start preparing themselves on what the repairs will be, so that way you don't get blindsided by like, oh, this property needs an extra $30,000. No, I literally tell you what it needs. I've done some deals here in this area. If you have done some deals, if you haven't, it's perfectly fine. It's just a learning process. But if you've done deals, then you start learning how much repairs it's needed on the area that you're wholesaling. If you're wholesaling locally, or if you're wholesaling virtually. Now, gut job repairs, this is a complete disaster to complete demolish everything. It's basically bringing everything new into the property. You're gonna find a lot of these properties that are gut job repairs. In some areas, locally, you probably find maybe 5 to like 10 of them. You find a lot of these gut job repairs in Chicago. It's just how in the state of Illinois, I should say, not just Chicago specifically. But you're gonna find a lot of those over there. Even Indiana, it's just a Midwest states that there's not a lot of population out there, and then there's a lot of poverty going in those states and cities and counties. So it's just a lot of properties don't get taken care of. And or sometimes if you're reaching out to vacant properties, they don't have pictures, and then they're vacant depending on how long they'll be vacant for. that's how the property starts deteriorating. And those are the properties that you want to start considering that they are going to need the full gut-up repairs. And not only is going to need gut-up repairs, but it's going to bring those even unexpected repairs, like maybe foundation, maybe termites, maybe piping, the entire full piping system, and it needs to get readjusted, or a sewer, just something major extra that is going to need, that is going to bring like the cost even higher. But again, usually for these properties that are gotcha repairs, they don't sell anything more than $50,000 from them. Again, it depends like on your area, wherever it is, but usually if you see properties $30,000, $50,000, those are the ones that are going to need major repairs. But again, basically, basic breakdown on the repairs: stick to the averages. Again, the averages 10 to 20 on light repairs, $25 to $40 per square foot on the average repairs, and then gut job repairs $45 to $60. And also be aware, if you happen to come across properties that do have like a basement, some of those properties also are going to need basement repairs to like get a fully updated as well too, if you have a basement in your area for that as well. Now, the next thing is that we have to look into an analysis is understanding comps or comparables. So whenever you try to look for comparables, we have to understand what kind of comparables, or I want to make sure that we're comparing apples to apples. So part of those apples to apples is make sure that we stick to specific parameters, and these comp parameters are going to be based on what an appraiser is looking for. So what appraiser does is they look at your property, if you happen to be buying the property yourself, and they're going to analyze how much the property is worth at its current condition. If you get it fully updated, then what's the property's value going to be once it gets fully updated? Then that's where a second appraisal gets done as well too, and the appraiser is going to determine. But whenever they do their appraisal and they start looking for similar properties, or AKA apples to apples, they stick within certain parameters to make sure that they're finding the best match properties. And what they're going to start off with is the living space. The square footage of the living space is going to be plus or minus 300 square feet. That's going to be applicable to, let's say, a 1,200 square foot home, plus or minus 300, plus 300, 1,500, the highest, and then minus 300 is going to be up to like 900 square feet. Depending on the platforms that you're using, some of them let you filter down to those specific numbers, and then some of them like Redfin, Zillow, PropWire, and some whatever the platforms you're using, they're going to be more broad. So you just have to again make sure that you stick with those parameter. Don't go beyond anything beyond that whatsoever. Again, you just have to make some exceptions on some of those platforms. Next, on the lot on the square footage on the lot, this is going to be applicable more on properties that are acres. So 1 acre, 3, 5, quarter of an acre. So you're comparing land to land as well too, if you're trying to wholesale land as well. Most of it comes down to on those acre properties, you have to analyze the lot size as well too, because again, you want to make sure you're comparing apples to apples. Radius. Radius, you want to make sure that you're within a half mile to a 1 mile radius. Some platforms let you draw like a little radius map. But whenever you're doing that radius map, part of it as well too is making sure that you're not crossing high traffic roads or double yellow line roads. What those double yellow line roads are going to be is basically a split between neighborhoods. So one side is going to be one neighborhood. That major traffic road, it's heavy on traffic from commuters, buses, delivery people, semi trucks. So it's just a constant flow of traffic that is kind of considered like a danger area. So anything that is high traffic roads are going to be kind of a border for one neighborhood to another neighborhood. So if you have a property, and we always come across, whenever we're analyzing properties, we always come across busy roads. I'll show you guys how you're able to find out what those high traffic roads look like. But again, anything beyond that side, no matter how similar the property is or that comp is, same square footage, same year, same lot, whatever, all the filters are identical to the property. I can't pull that comp whatsoever just because of that high traffic road whatsoever. Again, it's a high traffic road and it's a danger area that an appraiser is not going to pull that whatsoever because of the danger, but also because, again, it's splitting up two neighborhoods in just from that area whatsoever. Next, make sure that you find out comps. Whenever you're looking for comps, don't just find one, maybe two. Try to get at least three of them. If you're not getting at least three comps, it's going to be very challenging for you to get rid of that comp. If you're working with agents, which is what I started with, working with agents, ask the agents, hey, Mr. or Miss Agent, do you happen to have some comps for this property? Because again, the price that they come up with, it's either going to be the seller that they want that specific price, or the agent helped out the seller because the seller doesn't know anything about the property. So they guided the seller that we should start our strategy is going to be starting at this price point, and if we need to make adjustments, we'll make adjustments for there, which is what 95% of agents do. It's just occasionally you're gonna have stubborn and stern sellers that they are gonna be just giving you a straight price on what the property will be. But again, majority of the time, 95% being from the agent, is ask the agent, hey, can you provide me some comps if available? If not, it's perfectly fine. I can do my own due diligence. It will just expedite my process on bringing you an offer, so that way we can try to close things as quickly as possible on this property. So again, if you don't have your own, try to ask like an agent or work with like an agent, or if you're reaching out to an agent, just ask the agent. But whenever you're finding those, you're analyzing a property, you have to at least find three comps whatsoever. All right. Uh, any questions? I know that was a handful of information, but again, it's just basic details to build the fundamentals, and then we're going to start getting into like the analyzing, which with the analyzing, we are going to be using live examples as well too. But before I like to move forward, just let me know if you have any questions whatsoever. If there's some questions, it's perfectly fine. You're not able to mute yourself, so you just drop the questions on the chat. So just drop it in there. But any questions, just let me, I'll definitely be able to see it. But from here, let's try to analyze a property. And then someone did have a property did give us an example. So thank you. Who was it? Who was it? Mr. Babak. Thank you for the property. Let me just share my screen here, so that way I can start analyzing this property. And else how to, sorry, my eyes. How look it took to you to get your first deal? 3 days. How long did it take me for you to get my first deal? 3 days. 3 days because what I was actually doing, it was where's it at? Where's it at? What I was actually doing is building a list. My first list was actually um, my first list was actually probate. My first deal was actually a probate. So within 3 days, I was looking through Redfin, I was looking through Zillow, and I had actually come up across a property um, in the Midwest that was a probate deal, and the seller the kids inherited the property. So it was a total of 6 kids. All 6 kids wanted $10,000 each. And I was just working with the agent. The agent was very informative, very just, I loved that agent so much just because he provided a lot of information, and especially those details. And from there, the ARV for that property was $240,000. But when we did like our inspection period, we did notice that the property we analyzed like the repairs, how much estimated repairs, which was a full gut job repair property. But that property needed, I think, $115,000 in repairs, plus what we found out about the foundation, it needed an extra $30,000. So we had to make our adjustment based on that analysis. But within 3 days, that's how I was able to find it. So I have built up a list of agents, called the agents, and then I think it was like I'll say between 80 to like 100th call, I got in touch with that agent. about that property, and then from there we work things right away, and then within 3 days we got the property on the contract. Just because again I work with the seller on what they wanted, $10,000 each minus taxes. We negotiated like a little bit. They had it around $75,000, and we dropped it down to like $60,000. Not a huge difference, but it was just trying to work best with us with the sellers. And again, if we had to make some adjustments, we had to make, which we did based on the foundation. And we ended up what was it, readjusting it to like 52,000. So not a major difference, but it's just something because again, the sellers didn't want to deal with the property, and then from there they wanted to make sure that they at least get close to like $10,000 minus the taxes they're gonna be paying on that as well too. Can't not unmute myself, but can you give me an example of cold calling? It depends on what kind of cold calling. There's vacant properties, there's probates, there's agents, there's sellers directly. There is pre-foreclosures. There's so many. So it really depends on which route you're trying to get into. If you want to talk with sellers directly on my website, there's a link is on the chat if you have access to that. There's the a cold calling script to sellers directly, because there's sellers, there's agents, and again the rest will vary. You're talking with investors as well too. So but direct to sellers, there's like I have a cold calling script on my educational side. So if you head over to eltonvargas.com and head over to the education, there's literally some books that I've read that help me out with real estate, but there's a cold calling roadmap. You download that. That's going to be a script that I have available there. So I'll drop this on the chat as well too, so that way you have access to that whatsoever. That's what fast good for. Oh, yes. My pleasure, my pleasure. I mean, it was kind of fast, but we did have to like extend. Like I got the property in the contract in 3 days, and then I think it took us like 40 days, 42 days for us to close. Just because we had to make sure there were some of the part of the home didn't have wood, so getting to like the second level was a little bit tough to get up there and figure out like what actually needs up there. So again, it's just a case by case scenarios that you're gonna be finding in real estate. So just be prepared for that as well too. But let's pull in this address that we have going on over here that somebody shared for us. Thank you for sharing it. Again, if you have a property you want us to analyze, by all means, let's drop it out. I don't know what the strategy is on this property, but it's perfectly fine. I'm able to see on what this is happening based on the condition of the property, which so far, this property, great home, kind of looks a little bit what is that in San Francisco? The old looking Victorian style home. That's what it looks like. Oh wow, great. This is a great home. So fully updated. So this is an example. So if you're looking for comps, I like to look for comps in 3 different ways. Properties, when I look for comps, I look for properties that are currently active. I look for comps that are have sold in the last 6 to 9 months, and I like to look for comps that are pending or are under contract. Because what that's telling me is it's telling me 3 things: what the market has done in the past, what's actually happening right now, and what's actually happening in the future. So those are 3 different time frames that I like to look at comps. I don't just look for recently sold. So a little hint or a little tip, a major one I should tell you off the bat, is look for past sold, present, currently under contract and pending, and then look for what's available on the market that it's fully updated. That if you're not able to find any comps from those 3, then again, that's why I'm able to find comps right away on my cases, because I'm looking at those 3 time frames, and that tells me how the market is reacting on that specific area for that specific property that I'm looking into. So this will be an example. If I were to pull a comp, this is exactly what I would want to have as a comp, where the property is fully updated, great condition, floors, sliding, windows, um, faucets. It's the entire spectrum that it's being achieved over here. Are you still marketing for probates? Not so much. Um, I look more now into tire landlords, honestly. So tenant landlords are really amazing just because I'm talking a lot with investors. So if they have an investment, it's literally transitioning one investment to another investment, and it just makes the conversation really smooth for us to talk. And a lot of investors do know like the stuff as well too. How often is the Zoom training? Every Monday, Wednesday, and Friday at 6 p.m. Pacific Standard Time. I'll get back to your question, Jesus, because I see it's a little bit longer. I just want to make sure I'm able to analyze this property that we have available over here really quick. But basically with this property, my strategy will be a buy and hold property. So this will be more of a rental property. So part of the calculators, so that's what I've designed. If you guys want to have access to the calculators, I dropped the link on the chat for the calculators. So you have access to all those three. And part of that is going to be a ARV calculator. So is there the basically ARV is going to be more of a fix and flip property. So a property that needs to get updated, and a fix and flipper is going to be an investor or buyer is going to be looking into that. The one that we're looking right now, the subject property or the example that was provided to us is the complete rental calculator. And what the complete rental calculator is going to go through the entire basis of what a rental property is going to look for. And I'm glad I got a chance to start off with this. So this, it's a property that, again, let's see, is it a single family, multifamily? Um, so it is a multifamily. The thing about it is whenever you're looking at rental properties, you do have to find properties that are going to be that are going to need rental. So you need to have like the rental information. There are numerous ways to get it. This property is listed with an agent. So one route, ask the agent. Some agents do know this stuff. Some other agents just like to give estimates or ballparks. So when they give you ballparks, they're just gonna tell you like, it's gonna be more around like this and that, and that's perfectly fine. That's why you have to do your due diligence. So we're using a few platforms to find the rental. My favorite one is Sumper. So Sumper.com is a great one, but I don't like to use Sumper.com. What I like to do is type in Sumper, highlight the city, state, and zip code, and then head over back to my search engine and then type in Sumper, Cleveland, Ohio zip code, and it's gonna give me it's always gonna be the first tab that's gonna pop up, or maybe like the fifth one. But then from there, it's gonna give you, oh, you see, sometimes not even the first one. Let's check out this one. Uh, so this actually it was available on Sumper, and does it tell me how much was it rented for? No, it does not. That's perfectly fine. So let's continue looking at some per apartments. Okay, that's perfectly fine. So whatever is happening with some person not giving me that. My other favorite one is Zillow Rent Estimate or Zillow Rent Estimator. That's my other one that I like to use. So that's where we have to highlight the entire address and take it over to the rent estimator. And it's going to give us, if it's a multifamily, it's going to give you the entire property value. So for this one, the entire home, it has to be rented at 1462. It's giving you like a range over here, 14 to like 18. Sorry, 951 to like 18. What it gives you over here is always going to be like the middle, or what the average is going to be. So I always like to go based on that. So I'm gonna estimate this around 1500, so ballpark 1500. I don't know how many properties this is. If it's a single family, sorry, if it's a 2 units, or 3 units. That's the only thing I don't know. Let's see here. But let's go to the details and let's find out what's actually going on over here. If it gives us anything whatsoever. So it doesn't tell me. So I'm gonna guess it's gonna be 2 units, one upstairs, one downstairs. The first one's gonna have like stairs to go up the side, maybe. Or maybe the stairs are on the side. That's something that happens. No. So this is gonna be a duplex. Sometimes you can tell by the mailboxes as well too. So 1 unit upstairs, 1 unit downstairs. So it's going to be 2 units. So 1500 divided by 2 is going to be 750. But let's start analyzing the property. I need to get some information first. So 120 is the asking price. So I'm gonna put it here 120. The down payment, again, it depends on like an investor. I'm gonna go with this. I'm gonna go with standard numbers right now. So these are live current standard numbers. It's 20% down, most common. Interest on a multifamily is gonna be at 7.5 to like 8%, unless the buyer wants to purchase points. Then that's purchasing points is you can purchase for $1,400, depending on where you are. You can purchase a quarter of a point. So what that is let's say my interest rate is 8% and I purchase points. I purchase 1 point. 1 point is going to be a quarter of a point. So now my new rate is going to be 7.75%. So that's what purchasing points does. But again, I'm gonna stick with the standard numbers of 8%. Closing costs are going to be between 2 to 5%. So I can bring this down to 4%, especially like in the area that we're looking, Cleveland, Ohio. It's not going to be more than 2% in all reality. But unexpected fees, or maybe the broker just wants to charge extra fees. And again, you can always argue those fees as well too. But now the rental, it's a 3-2 on the property. So sorry, it's a 5-2. So I'm guessing it's going to be a 2-1, a 3-1 and a 2-1, which is kind of weird, but it is what it is. But let's go with here. Let's take off the studio. Let's take off this one. So I'm gonna put a 2-1, 750, and then let me put a 3-1 for 750. Again, these are just estimates. I still have to find out more about like the area. If I can find out exactly where this property is, I can even head over to the zip code. So let me type in the zip code and then see what the actual area is telling me. And what you can do, Redfin, Zillow, whatever platform you're using. Again, this is a rental example. I'm gonna head over to for rent and then type in the same square footage of my property. The same type of property that I'm looking into, a 5-bedroom property. There's nothing in this zip code, but there are some around the neighborhood. This one is not a duplex whatsoever. So let's change this to a house. And let me remove the borderline. So all of them are outside of my area. This one is being rented for 1,800. Then you have this 2,300. So it's a little bit outside of, it's a whole different area because our property should be somewhere in this quadrant right over here. If you guys let me draw it, this is kind of be our quadrant. That's where our property is. So all the properties outside of it are not really pulling up anything. Let's see if that changes. No, so this one I kind of have to go a little bit further than my radius, just because of that how big the property is. Again, this is going based like of the entire area. So I'm looking right now at a whole different zip code. So that's where you have to play estimates. So far, this one is at 2,300, but look at the condition of it. Our subject property, it's at a higher condition. It's at a better condition with updated utilities. So that's a factor where it can bring the rent can be definitely close to $1,000 each. So again, a total of 2,000 because we're looking at two different units. Then we have this other one. That's a 650. Where's this $3,000 one? So this is kind of our subject property, what it looks like. But again, the neighborhood over here could be very, very differently whatsoever. So that's the thing that I have to consider. So I'm gonna play safe that we can rent up the property for $1,000 each side, depending on how much they are. And also depending if there's tenants in place and if those tenants are currently they're currently in a contract as well too. So that's the only thing that we have to keep an eye on whatsoever. So continue going. The way this works is put the asking price, get the rental information. Again, we're going to be using different platforms for it. After you get the rental from it, again, we're estimating $2,000, $2,400 of income every single year. My expenses, My expenses does not include my mortgage. So expenses are going to be broken down as the following. It's going to be taxes, insurance, HOA, if there's HOA, maintenance, vacancy, and management. So these are things that if, let's say if I put myself as the end buyer, these are the expenses that I'm going to be dealing with on a monthly and yearly basis. But I don't have time to break it down. I'm just going to go broad right now with my standard 40%. So 40% is if you're going to be managed, if you have a property management manage the property for you. So if you live here in California, you live whatever state you live in, and then you're looking for properties to invest out of your state, then you're always going to have somebody else manage it for you. But whenever you're having those, they are going to charge you a 10%, 8 to 10% on the management fee. But if you happen to be locally and your investment property is locally or within your area and you want to be the landlord or aka the property management for that property, where it's going to bring a headache, but again, it's you're bringing down your expenses, is you're managing the property yourself, then that's going to be down to 30%. At the property, I don't know what the strategy is over here. If the person is looking into this out of state whatsoever, so I'm gonna go based on that they're looking out of state, and their standard expenses are going to be 40%. So again, the 40% is going to be all those expenses that we mentioned. So the way it works is we get the gross income, how much the property is renting for the year. Then we have the expenses. We subtract those two together. Now, that's what is going to give us our net operating income, or NOI. The net operating income for the entire year is $14,000 or $1,200 each single month, which is definitely good. Now for the property, something else that we have to deduct from it is called mortgage, or what we like to call in the investor side or rental analysis side is called debt service. So debt service is something else that we have to deduct from the net operating income. So again, the net operating income is after the expenses, but after that net operating income, we also have to subtract the mortgage from it. So this property specifically, based on the current rental analysis, again, I did overestimate just a little bit, just because I was looking beyond the area that I was looking into investing, where other properties were renting at 2,300 and 3,000. The 3,000 was at the similar condition that my subject property, and then the other one was $2,300, but the subject property's condition was way less, at a lower condition than the one that we were just looking at on this one. So the property dash cash flow at its current rent price, $1,000 each. So it does cash flow $5,900 each single year. Now let's say I don't really like that $1,000 number whatsoever. Let's go with that 750 just to play it safe. If I change the rental on the property, will it still bring me some money in? And let's check out the numbers. So if I buy it currently at the $120,000 price point, I rent it out at $750 per unit. I stick to my 40% standard rule on the expenses. Again, breaking down the expenses are taxes, insurance, HOA, maintenance, vacancy, and management. After all those expenses, it brings me a net operating income of $10,000, and subtracting the $10,000 from my mortgage or my AKA debt service, the property cash flows every single year $2,300, or AKA $195 every single month. And so the property does cash flow even playing it safe, and it's also at a good cap rate. What cap rate is basically price um, price divided by the net income that it brings on the property. So think about it like this. Whenever you're buying a property, you always want to buy it at a high net cap rate, because at a high cap rate, the property's price is low. If you ever come across a property that is very expensive and you look at the numbers and the cap rate is like 3%, then the price of the property is going to be way more expensive. And that's the most common strategy at rental properties, is buying at a high cap rate and then selling at a low cap rate. Because what a low cap rate is basically saying the investment is a little bit safe, but there is a lot of risk into it, because again, you're playing what the markets are happening at the moment. Um, And the safest route is always to buy it at a higher cap rate. So if you ever come across a property that you're analyzing and the property is around 3%, then that property is definitely going to be one of the ones that is going to be a little bit riskier. And it really depends like on the investor, what kind of strategy you're looking into. So here's an example. The property right now, they're trying to sell it for $120,000. It's at a 9% cap rate. Usually for investments like that, you want to look for, if it's already at a high cap rate, try to push it even more. And what pushing even more is basically push on the cap rate. Because again, if we push the cap rate from 9 to 10%, it dropped down the price from 120 to $108,000. Let's say you start negotiations maybe at $98,000. Again, that's getting you the property close to like an 11% cap rate. And what the strategy is for investors that are buying and holding is they want to buy at a high cap rate. And whenever they want to get rid of it in 10, 15, 20 years, because they want to invest into like something bigger, they always going to try to sell it at a very low cap rate. So this property, it's really amazing. It's at a great cap rate so far. Again, it's up to you on how much more you want to push into it. Again, I'll try to push it even close to like 12% in all honesty. It's just I like to be very aggressive on my offers, and I'm not really scared of that whatsoever. Just because again, I like to bring some facts into it. And maybe I find there's not a lot of other properties whatsoever, so it's going to be really hard to get this property being rented out. And maybe whatever's happening like on the market. So I have to do like other type of analysis into it, which it takes even longer to analyze rentals. But the main thing about the rental is try to understand how much can you get it for on the price. Always try to get it at a lowest price rate, low price rate, high cap rate, higher price, lower cap rate. Just let you know about cap. And then also try to find out like the estimated rent for it. The estimated rent is always going to be a possibility, but also how long is it going to take to get it rented out? Is it going to take 30 days, 60 days? Again, especially on the property management, how quickly are they able to get a lot of properties rented and fully occupied as well too? And also what kind of leases are you putting out on the market as well too? So those are extra things that you do have to keep in mind for your end buyer. That's something that, again, it's always good to collect from them to understand what their strategy and their investment it is going to be. But other than that, again, I will push even further. Instead of $120,000, a cash offer, $90,000, it is a 25% difference. So usually cash offers are going to be 18% and higher on the price difference from what it was originally intended for. So that's something that I learned from my experience. Whenever you bring cash offers in, at least 18% has to be on the cash offer on the difference from it. Sometimes, yeah, that's just even playing it safe. But if you want to play very, very aggressive, 30%, it's going to be very, very convenient for you. So that's buying the property at $80,000. And if you buy this property around $83,000, if we keep the rent the same, and then again, it's just the price on the property, you're going to see how much the property is going to cash flow. As you can see now, it's at a 13% cap rate, and now it's bringing almost $5,000 on cash flow every single year. An extra $5,000 for somebody who's making their first investment, it's really like a game changer, because you're also playing the tax game as well too. So that's one of the biggest strategies on buying and holding. And also, how much did it take for you to buy the property? If you buy an $83,000 property, your monthly payment is close to $500. Your down payment is 16, and your closing costs are 3,000. So all you need is $19,000. If you have 7,000, ask friends, ask family, ask other investors or maybe buyers to like, hey, can you help me fund this property? Again, you have to pay back to them because they're helping you get like the funds for you. But just negotiate on what the interest will be on that on that loan that you're getting from that person. If they want interest, if they don't even mention it whatsoever. But again, if you're very short of money, if you have like $5,000, cool, you have $5,000. Now have somebody else help you out with the rest of the money. You can start having like your own investment right away. And that's basically what I'm doing. It's getting private funding for my own investment properties. But again, I'm looking for properties that are constantly cash flowing. So if I were me, I would jump on this deal off the bat. So it will be a great deal. It's just I'm gonna negotiate and I'm gonna for sure negotiate. But I also like to play the patience game or where the patience game, because I did notice that the property was currently listed only like a couple of days ago. So there's going to be high competition. So again, if in 30 days, 45 days, the property is still available, cool. If it's not available, it's perfectly fine. There's always other opportunities. So that's why I don't like to spend too much time on one property. Just because again, if one doesn't work, I gotta have backups. I gotta have backups to fulfill my magazine, so that way I can continue shooting other offers to other opportunities. So on a daily basis, if you want to wholesale, even if you're doing it part time, submit 3, 5, 8, and it'll be great if you're able to get 10 offers out there. Because I bet you out of those 10 offers, you're gonna have one property that is gonna be like interested on getting it, just because again, they might be really tired of that property. They just don't want to deal with it anymore. They're gonna have like a huge motivation, or what I like to call is X factor. And that if you focus a lot on that X factor and just play it very safe, then that's how you're gonna be able to get like your deal from there. So again, I love this example. This was a great example on the rental analyzing side. Again, there's other things that I don't really mention, but honestly, it's playing it when I look at the rentals, it's playing it based on the cap rate, and play very aggressive on the cap rate. Because again, think about properties that are being rented as a business. If somebody has a for sale sign that they're selling their business, let's say it's a restaurant. You there's employees, there's this, there's this expense, there's all these expenses. You want to make sure that if you're buying that business, like you want to make sure that it brings you enough money into it, and it's all going to be about numbers. So rental properties are strictly down to the numbers. And the numbers are going to be income versus expensive and mortgage. Those are the three pyramids on the rental side. Nothing else beyond that. When you all the analysis outside of that, cap rate, see what is it? Gross rent multiplier, cash on cash return, cash flow, debt service cover ratio. Those are outside fundamentals, but the main fundamentals on the rental side is going to be price, um, rental, and expenses. Those are all going to be the three main fundamentals from there. So hopefully that's able to help you out. Who was it that provided buyback? Hopefully that was able to help you out on getting that deal done, because that's a great deal and it's a great property as well too, just because it's in great shape whatsoever. But let me go back because somebody else had some questions. Jesus. So I'm sucked in. I had a stroke in 2021. I cannot drive at the moment. Do you recommend using Google Earth to find properties? Yes. Oh, I've done that on these live events where I use Street Viewer to look at properties. So if you're looking at this subject property, if I see another property that maybe looks right next door, right next door. It really depends on this property as well too. If the seller might be interested on selling this property, because based on Street Viewer, the property's condition, it's a little bit outdated just from the outside. I don't know about the inside, but it is also the same type of property. It is a duplex, so one unit upstairs, one unit downstairs. So that's another one right there where you're able to find other deals as well too. And then sometimes you're able to find lands, maybe even for sale signs as well too. So doing Street Viewer does help you find other deals, which I've done these live Zooms and I found other opportunities as well too, where in that same street, wherever we're analyzing like a property whatsoever. Where do you look for these opportunities? So for these opportunities, again, it really there's so many platforms, so many websites. You can even find opportunities such as in eBay. You go to eBay, and it's true. You can go to eBay and then type in homes for sale, and there's going to be homes for sale, and those homes for sale are going to be homes that are being sold by owners. So the owner is actually selling their home on eBay. I don't know who's crazy to buy it through eBay, because eBay must have a great guarantee that if the property is not what you get your money back. But I mean, it is what it is. But you're able to you're able to use platforms like Zillow, Redfin, PropWire, PropStream, Batch Leads. If you're a real estate agent, you're able to you might have access to like the MLS. But if you don't, there's for sale by owner websites. There's a bunch of platforms that you're able to find a lot of properties. And the most fastest route that you can do is if you're driving to work, if getting to work, you're driving through homes, look at those homes. Or if you see like a home that just kind of looks like somewhat in bad shape, or just it can need some extra love, write down the address, the address of that home, and then you're able to use specific skip tracing tools. Or what skip tracing is you get the contact information for that homeowner, and you're able to call the homeowner. Or simply, if you're driving by that home already, stop by, knock on the door, and just let them know, hey, I'm actually my name is my name is Elton. I'm actually I actually buy properties here in this area, and I'm looking to buy like a few other properties, and I came across yours. I'm not sure if you might be interested on selling your home, and let the conversation open up. If they might be interested, or if they're not interested, or if they have any other properties they might own that they want to completely get rid of whatsoever, you never really know. So there's so many routes and strategies that you can do on finding properties, but it's literally just about just looking for some. So the fastest way is check out locally, so that way you can find out what abandoned homes could look like. Because I bet you within a 5 mile radius, which a 5 mile radius is definitely walkable or runnable. If you want to have like some music in your ears and just run, then by all means, you can definitely do that as well too. Within a 5 mile radius, you can find a good 5 to 10 properties that you can add into like your list from there. So hopefully that's able to help you answer your question. But from here, I want to do since we're on Ohio already, let's do Ohio. Um, Cleveland, Ohio. I want to look for a property that now we're going to be using the fix and flip calculator. So now we're going to head over to the ARV one. And now we're going to be doing like the true analysis of finding comps, analyzing like the area, trying to figure out what else we're able to find from it. So let's check out some Cleveland properties and see what we're able to find over here. So let's check it out. Why is this thing glitching? All right, for sale. Cool. Let's reset it all. Awesome. Let's refresh this because this thing likes to get stuck at times. All right, here we go. Let me look for a single family home. A single family home that looks a little bit outdated, but also I'm add in some specific filters. The first one's gonna be I like properties that are at least 1,000 square feet. Just because anything lower than that I consider tiny homes, and I don't really like tiny homes. It just are kind of annoying to me, honestly. Um, and I'm exclude 55 plus communities. And biggest thing I like about Redfin is properties that have been sitting for 45 days or more. Um, can I still yes, of course you can still provide an address. That'll definitely actually help it out. Um, let's go through here. Let's see. Yeah. Actually, I'll wait for your address. If I'm able to find something, we'll just have to go with this as well too. So from this, I'm looking for properties that have been sitting here for like a while, and of course, I'm looking for the lowest price homes as well too. Try to understand what kind of condition a lot of these homes might be. Again, anything less than $50,000 are always going to be a little bit dangerous to look into, just because the condition might be in a gut job repair. So this is a prime example of what a gut job repair would look like. Um, so it's just very common to see these abandoned homes, and it's crazy that you can own a home for 35, 20%, even 3.5% of $35,000. And then you have an investor help you out with like the repairs, and you work with that. Hey, I'll take that. 035 35, you need $1,200. If you can save $1,200, you can buy a property, and then you close on the property plus the closing costs and whatnot, right? That's and you get the funding from an investor to help you like fix and flip the property. Oh man, you got yourself a money maker. So it's all about making sure that you get like a full picture of what the rules repairs would be, because sometimes it can get expensive. Um, So here, oh, actually, we have one over here. Let's check it out. So we're gonna be diverting into from Cleveland all the way to Bakersfield. So let's check it out here. So this property does it is off market. Great, awesome. I don't know what's going inside with the property. Just from the outside, it definitely needs window outside. The roof, I love these tile roofs. Um, they're really great. They last for a long time. Is this a high school? What is this? Oh, it's a freeway? Oh man, don't get me started with freeways. Oh, let's see. How is this? How is this set up? Oh man, off ramp freeway. So this is, let me see. How is this structure? Okay, okay, cool. I got scared for a second. I got scared for a second. Just because if it was like if the home was like right here, I'd be like, it's you better get a big deal out of this property just because freeways and off ramps, and then but luckily the property is on a um it is on a hill, so that really helps it out. But I got scared for a second. Oh man. Okay, but let's check it out. If you can provide what kind of details, what kind of repairs is needed, if you have any information about the internals of the property, that'll definitely be great. Otherwise, I can just estimate that the property does need kind of high average repairs. So let's check it out and what the asking price is at the moment. If not, that's perfectly fine. I can go based on what they're looking for, maybe 270, $275,000, if anything, or if it needs major repairs, they're probably selling around 260. So let's check it out. 260, 1091 on the square footage. It is in California, so California doesn't have any basements whatsoever. It is going to be a fix and flip opportunity. I am going to try to wholesale, so let's see if the wholesale is right on this one. So far it's giving me an offer of $169,000. Again, I'm gonna estimate the repairs that are going to be again on the high end on the repairs. So it's going to be 43, but here it's here in California. Bakersfield is not too expensive, so that's a really cool thing. It's probably going to be close to like $50,000 in my opinion. Um, so I always like to go $5 more on the price per square foot. But I know for sure it's going to be roughly around $50,000 on those repairs. Now, my investors, a lot of investors here in California always go for 15%, 15, 18% on the fix and flip side. So this property will need to resell for $385,000 if that's like the asking price. Again, I don't know how much they're asking for. I have to call him back to get the details. Yes, tenants, I want to sell. I want to sell. He was going to ask them first if they want to purchase. Oh, he's asking to sell. Okay, okay. Is there like a price point by any chance on what the seller is asking? Because right now I'm going based on like the 260, and that 260 is coming from Redfin's estimate. Um, and also maybe they might want a little bit more, especially having tenants. So it depends on how much that they're looking for it. So honestly, I think they might be asking for like 270, 275 in all reality. Um, that's my guess. That's my guess on it. But let's find out how much the ARV is. So the ARV, it's something essential that we have to find out. We just went through the repairs. So the repairs of the property are again going to be close to $50,000 because it's in California. 15% profit. So we're looking for hopefully to the ARV be close to like 380, maybe $400,000. If it's not, then again, that's where we're able to play the negotiation numbers for this property. So let's check it out here. Oh, wrong zip code, 93304. So let me look for some comps. Again, I'm gonna look for past, present, and future. So past being sold in the past. Right now, present, where was our property at? It was close to a freeway. This one. All right, cool. So it looks like our subject property is right over here. So it's gonna be in this quadrant. I see Palm Street being a busy road. Again, I can go check through that through Street Viewer. Let me check out Palm. So Palm, double yellow line road. You have construction. You have, I don't know if this is like a pipe deal or if it's just like a part of the street. So again, I'm just creating borders um for my home. Of course, you have the major one, two major ones, the freeway. H Street looks like another busy road. So this is gonna be my comp area. So I'm looking for what's available right now. It looks pretty big from the outside. I think it needs a lot of work inside too. I'm assuming, yeah, yeah, I'm assuming that as well too. Um, the oh, let's check it out. So, what kind of property is it? Let me go to the details. So it's a 1937 home, 1091. So let me set in the filters really quick. I'm looking for a home. Um, 1300, actually 1400 because it's 1391, and then 750 for it. Okay, so I have three currently on the market. This one, it's a quarter of an acre. Are we talking acres on this one? No. So this one won't really count because it's a quarter of an acre. Quarter of an acre is 10,000 square feet. Um, is it acres to square feet? Um, Here we go, 0.25. Yeah, quarter of an acre is 10,000. So this one won't really work because it's a little bit too much on like on the acre side. What about this one? This 319, 6,000 square feet. Okay, so this one's close. 1932 home. All right, cool. There's no pictures of the inside. So what about the description? Recently, oh, new AC. That's about it. Heating, but everything else looks like it's pretty standard. So it's not a complete rental one, but it's crazy how this one, is it a complete rental? I mean, completed, updated? Oh, no, it's not. Oh, man. So I'm glad I'm not able to pull that one. I thought it was. I thought it was going to be like a fixed up home. I guess I was wrong. Um, and then we have this other one, which is the 320. This one is okay. There's pictures of the inside. Good condition, 2-1. Our subject property is 2-1. All right, cool. So no bedrooms needed to get added. Good driveway, just need outside. Kitchen looks good. Probably just change the coloring, paint. So just little touches, but nothing updated on the area. So again, that's present. That's present right now. We have to look on also under contract. So let me remove coming soon and active, and let me see what's under contract right now. So we have two under contract. One of them is at 225. It's a 3 bedroom, 6,000 square feet. And then you have this one really close to your subject property. Um, really close to 190. So and then this is what I'm expecting. This is what I'm expecting out of the subject property. This is a complete gut job. And if this property is listed at 190, it all really depends on what's under contract. I mean, if there's tenants right now, it has to be livable. Again, it's against the law especially in California. Oh man, like these tenants should be having, if tenants were living in this place, they will have free rent for life, honestly. But the price depending on like on our subject property, I'm sure it's in better shape than that whatsoever. So this is close to where we're getting where the price point has to be at 190. So if they're listing it out for um what was it that I put in, 260, if again being a rental property, if it's a rental property, you just have to analyze it as a rental. But if somebody wants to fix and flip this deal whatsoever, then yeah, it's definitely gonna need some like a good amount of repairs for it. But if this property over here is being a 190, then you can definitely for sure get close to a 80 to $100,000 price difference based on the property's inside conditioning. So we checked on the present, what's currently active, what's currently pending as well too. So now let's look at what actually has sold in the last 6 months. And let's go to the most recently sold. We have this 289, great shape. So this one's selling for 290, 3-1, fully updated. That's an astonishing great work done, honestly. Just I can just tell by the kitchen. They didn't do too much on the outside. And again, that's what a lot of investors here in California do. They very keep the minimal on the outside. It's all about the internals. But great work on the inside whatsoever. And just great shape. They didn't even change like the numbers. So sometimes again, that's just doing like a quick fix and flip. I'm sure that's what these sellers going to be doing, but this definitely is going to need a little bit of touch, like just like on the gardening area, just hose things down, maybe power wash, bam, done deal. So this sold for 290, which is a price per square foot of 253. So let me start putting this over here. 253. We have one subject property. Let's look for another one. This one sold in January, 325, 1921. So it is a little bit older, but again, great work on the update. This could be like your investor to bring the so whenever you look at comps, you also got to look like this. This is my investor. This is one investor I can reach out to that did this deal. This is another investor that I can reach out to. Hey, I have this property on this address. You already did one deal, so you already know how much you can do in repairs. And I see that the work that you did on this other address, it's amazing. This is the same thing that it needs on this property as well too. I'll have the pictures. You let me know if you might be interested, and bam. So comps is kind of basically looking for buyers, buyers that are fixing and flipping deals. And this is another one right over here off the bat. Um, this one is sold at 232 per square foot. Um, so let's put in 232 per square foot. And then we just have to find one more. This one doesn't have any pictures whatsoever. So I can't really tell if it's fully updated or what's going on. Let's check out this one, December 27th. Okay. Uh, rental. This looks like it's a rental property, as well too. New carpet, paint, corner lot, located in a very quiet a street. Moving ready, breach. Like, okay, cool. That's a standard description of an agent. So far I like this one, but let's keep on trying to find something else. Might be better. This one, not so much. That looks basically like our subject property in a little bit better shape. This one, nothing too crazy. There's this $300,000 one. 300. What's the year though? Hold on. 1945. Okay, okay, cool. 10 years still it breaks it. It's still within it's a 3-1, so the end buyers could spend an extra $10,000 to add another room for it because our subject property is 2-1. But great shape home, well maintained. This is probably like a homeowner. Um just because they start adding things to like the walls. Um so yeah, this is a great comp over here. So this is not that wasn't even fully a fix and flip. It was just like a great home that sold at a good price, and this sold for 270 per square foot. So it is as you can see, our comps are very all over the place on the price per square foot. So it brings us close to like 275. So again, it is going to be really close to what I was mentioning, getting close to that 180 sorry, getting an 80 to like $100,000 price difference. And an actual fix and flip investor will want to get it close to this price point. But again, it really depends if they're selling it for that much, and also on the repairs. Once you're able to get a full insight of what's happening inside, then that determines it as well too, what's actually happening in the inside, so that we can get like a full picture. But if it's being rented out, it has to be healthy and rental ready. The comps right now, they are in a mix of things as well too, because I did have to go a little bit further down. But I looked at what's actually pending right now, and what's pending, it was like at $190,000, and not even that $190,000 price point will be. So this will actually be 160, will definitely be like your highest one, and your highest price point from like an investor, honestly. Nothing beyond that, especially on what the property needs from there. And based on the comps, on the three comps that we're able to find, it's like a mix. Some of them that have been really taken care of, two of them that it looks like they were fixed and flipped as well too. So these were two in buyers, but you can tell the difference between the two investors. This is one that really did like an amazing work on the property, from like the outside to like the inside, to one that just kept it very minimal, and just did like the main, like the inside. They didn't even take off like the tile countertop vanity from like the bathroom whatsoever. So again, this is what I talk about whenever I look at repairs. I just bring an average number, because this is a prime example of two different buyers on how they're going to be doing things. One is going to be very conservative, so this is going to be the conservative buyer, and then this one's going to be the aggressive one, where they're going to try to milk the most out of it, because again, they try to get out at the lowest price possible. But whenever they come to repairs, they're going to bring like good repairs as well too, because they probably have a contractor that they do a lot of deals with, and whenever that contractor does the updates, they already know what exactly to bring to like the table to make the property very unique from there, which makes it even easy for the agent to sell by writing their great descriptions on it. So it just makes it flawless to sell. Which, how long, we can look at the history as well too. How long did it take for them to get it to fully get rid of it whatsoever? So let's see. It was listed for 150, got contingent, and it ended up it actually went over the price as well too, for 190. And then just look at that. Just the fix of just the repairs itself brought the property to $325,000. That's incredible. That is truly incredible. $125,000, which the probably the investor probably spent close to like 70 to $80,000 out of it, for them to make a good $40,000. And that's here in California as well too. And so that's just an astonishing deal whatsoever to like get as well too, from investor. And then this investor, again, this is a prime investor that really knows what they're doing, and they go like all the way. And they were very competitive, so they really wanted this property, because it was listed for, they spent $40,000 more than what it's needed. So it didn't even sell under the asking price. It went over the asking price as well too. And how long did it take for it to sell? Um, it literally took 2 weeks. So this is a cash offer, close in 2 weeks. It's okay if I overpay, because the work that I'm gonna do is gonna bring the property to $325,000. And I bet you that this seller didn't even have property sell. There was no comp selling for $325,000 at the time, because if you look July, you take away 6 months, again, that's looking over 12 months. Maybe there was like one or two, but it's a very competitive area, where the end buyer ended up overpaying for it. So depending on the property, on how much it needs, and what the seller can do for it, then that really determines it all whatsoever, on how much they're able to get. And then now the once it got fully updated, um how long did it take for it to get fully sold from there? So 190, and they did the updates in, They did the updates in 2 months. So it was 2 months of work because I'm looking August through October. That's literally a little bit over 2 months. In 2 months. So damn, that's crazy. So yeah, I like this buyer so far, honestly. So this will be like a prime buyer for you to like work with. Where the property they ended up selling at the asking price of 325. It's surprising it didn't go over, but it's just whoever bought the home, the first time home buyer, or whoever ended up lives in the home now, they're like, we love the home. We'll just take it. But it did take a little bit of a while from October all the way up through completely closing in January. So it did take uh 2 months. So not bad whatsoever, but it is what it is. The seller was happy with it. Um let's see. My eyes. I'm sorry, did I miss it? What would be the MAO based on repairs? Again, I'm ballparking based on where the property, how much the seller is asking for it. I'm estimating that they're asking $260,000 for it. But other subject property, if that other subject, I'm not even 260, just because it really depends, honestly. I'm just going based on being a rental property. The seller's gonna want uh, how much the property is being rented for, and then from there, they are gonna wanna. It's here in California. The cap rate here in California, it's very low. In Bakersfield, it's all about trying to find what the cap rate is. But if you're able to find out how much the seller is looking for in terms of how much the seller is currently renting it for, you're able to determine what the cap rate will be and play it safe, go with like 4%. That's going to give you like what the asking price will be like on the property whatsoever. Because right now I'm estimating the property being at 260. But even after that, the ARV that I can get for for this specific property is 275. So again, that's the property is overpriced. But even at that 275 price point, an end buyer or an investor is going to be paying $160,000. But based on this comp that I found, it looks like a lot of investors overpay for it. So I'm gonna go with a buy and hold investor that they're probably gonna be overpaying for like this property, maybe close to like $200,000, and your offer just has to be below $200,000. So if you want to get a $10,000 wholesale fee, um, again, try to start your negotiations at 180, 185, $190,000, so that we can get a wholesale fee of $10,000. Because again, I'm just estimating based on what other buyers are doing, and this end buyer, if this end buyer overpaid for this property for $40,000 more, then your end buyer for your property can definitely overpay as well too. So your $10,000 wholesale fee is playing conservatively, so you can definitely get more out of it just because of how the area is going so far. So my offers, I will start the offers at $180,000. But again, you have to determine first how much the seller is currently renting it for. So you have to use the ARV calculator, I mean the complete rental calculator, and seeing how much the seller wants for it, how much the seller is currently renting for it at the moment, and then go through like the numbers on this to keep the expenses at 40%, and then find out like what the net operating income is, and it's going to give you the results here on what the cap rate is based on the property current value. So if it's currently listed at 260 and and the rental is $3,000 right now. It's here in California. So 8% cap rate. Let's just say that's the current cap rate of the property. Head over to 4% a cap rate, and then you're gonna be able to see how much the seller is gonna be wanting for that 4% or maybe 5% cap rate, just because it's in Bakersfield. but it shouldn't be more than 275 that the seller should be asking for this property, because although the properties fully updated ones are selling close to like 300, 350 like the most, so nothing more than that whatsoever. So your highest offer will be $180,000. Um, does it show the buyer's info? No, but what you're able to do is head over to PropWire. Whenever you're looking at comps, head over to PropWire and then find out who the previous seller was on the property. So go through history, and over here is going to tell you CQ Family Estates LLC was the buyer for 190, and then CQ Family Estimates was the seller. So that's your seller, that's your buyer right there. And the way you're gonna be able to find it is copy and paste their name into Google, and then you're gonna find open corporates, or depending on where the business is located. Over here it says California. You can head over to because if you're looking at a lot of deals here in California, especially LLCs, it's going to tell you who the listing agent is. So I don't know if this is here's the thing. Whenever you're looking at the agent name, it could be the agent could be the owner of the business, or it could be the lawyer of the business. So a lot of investors always like to secure themselves, and they actually have their lawyer list themselves as the agent. So anything go on with the LLC, if you try to sue the LLC, the owner, the business owner is not gonna get the letter that they're getting sued. It's gonna be the agent that's gonna get the letter, and then they're gonna let the business owner know. So that's sort of thing too. So I don't know if this address is gonna be the main address, but if this, let's say for example, this is the actual business owner, you know the name and you have the address, skip trace this address and reach out to the agent, or the person's name right here, and then figure out like, hey, are you by any chance blah blah? Hey, my name is Elton. I'm looking actually I wholesale some deals here as well, here in Bakersfield. I actually came across one property that you sold in the beginning of the year. I actually have another property that I would actually have another property in the same area that you invested in. I'm not sure if you're still looking to do any other properties. It is an off-market property as well too, but I'm not sure if you might be interested on it. And that's your pitch right there as well too. And ask more questions as well too, like what kind of properties you're looking for, how many properties are you doing in a month, what's like your buy box, and like all this information, so that we can make sure you get all the information, you build a relationship, and once you have the property in the contract, hey, look, I have it on a contract. My inspection period it's happening right now from these dates. Would you like to check out the property in person, or have somebody of your contractors or somebody from your team check it out, so that if you want to check it out, cool. If nobody's available, below are the pictures of the property, and here's my asking price. Remember, again, you always want to tell them how much you're asking for. Don't let them know, hey, how much would you want to purchase this property for? No, always put how much you want for the property, and then from that negotiate. So if you get on the contract for 190, and you're trying to sell the assignment of contract for $230, let them know, hey, I'm asking $230,000. It is going to be cash, close in 30 days. Um, and then you also have to pay the closing fees as well too. And also the earnest money deposit. You also have to deposit, there's an earnest money deposit, non-refundable, of $2,000. Maybe you put $1,000 and you're asking from the buyers directly for $2,000 if they're interested on the property. Man, and that's how you let them know. But there you go. I just did the skip tracing. I did the buyer's finding for you on this subject property. But that's how you're able to find it out through PropWire. Because the PropWire is going to give you like the name of who the seller, who the owner was at the time, and That's it. So I love LLCs because LLCs, I use open corporates to find out. The only thing about open corporates, sometimes you are going to come across the um, you sometimes you got to come across the lawyer, not the business owner directly. All right. But that's our analysis on the fix and flip side. So hopefully that's able to help you out. I know it's, again, I don't have a lot of information, so I'm just playing based on ballparks. But it's just sometimes that's the way you have to go based on as well too, especially if you're reaching to like off-market sellers. It just that's the way it really has to go from time to time. Um, and then, but other than that, that's pretty much our entire analysis. So I'll leave it open right now for our Q&A. If you guys have any questions whatsoever, I'll definitely leave it open. You guys are able to unmute yourselves as well too. So any questions, let me know.
Hi, Elton. This is Babak. Thank you for all of your work. I have a question regarding that one that I submitted with Ohio. Mentioned something that every time you pay cash, 18% you should give lower price or 18% as a cap rate.
What do you mean? What do you mean? What do you mean?
So on that one, you said if you pay cash, you need to have a discount on the
usually oh yeah, usually for cash offers, it's gonna be it always is. Even finance offers as well too. It has to be at least a discount of the property around 18%. So that's just playing it safe. Sometimes again with cash offers, you can get like a bigger discount from there. That's why you're getting 30%, 30 or 40% from their asking. But from a lot of the deals that I found out that are cash, it's usually nothing less than 18% on the cash offers. So if you're trying to cash offer, you're trying to finance, yeah, just to purchase
18% from the purchase.
From whatever they're asking, just take away 18% if you're trying to do cash. That's what I've noticed, especially a lot of those a lot of Midwest states. Those are you're definitely at least you should be getting at least like 20% on the discounts from that. But now the bigger states, more expensive states, now you're getting close to like 15 to like 18% like on discount the cash offers. But still, that's what I've come across a lot of the deals that I've done to be discounted from there.
But the reason is seller shouldn't worry about the having the loan approved for the buyer or.
Oh yeah, it's an easy process. The money's available. So if you have the money available, cool. Or if you're working with the end buyer and they're cash ready, then it just makes everything a lot faster because the title slash escrow, they get all the funds, and it's easy for them to like depending on the seller if they want to check or if they want a direct deposit. It just everything flows rather smoothly on the cash side.
Yeah, for this deal, I investigated. Unfortunately, the city of the Cleveland has many regulations. So lead certification is one of them. And I don't know how much does it cost. Plus, the house is 1910. Still, I worry that it will be like a 20 pages of inspection results.
Yeah, and that's the thing. I mean, it's in great shape. It's about sometimes it's all about finding out the seller's disclosure. So if it's listed with an agent, ask the agent for the seller's disclosure because the seller's disclosure is going to give you all the information from the seller directly on all the anything that is wrong with like the property. Of course, the inspection period or having an inspector or a contractor check out the property is going to give you a more defined detail.
Elton, sorry interrupting you. I asked the agent, this house owner is a corporate, and they said we don't know anything about this because we rent it out. So they are not saying in disclosure, and that makes me nervous.
Oh, okay. No, that's perfectly fine. That's very common with hedge funds. There's it's just a level of like so many people you have to so many people you have to get in touch for if anybody has any information. And heavy investors or hedge funds or banks don't have any information of that whatsoever. So that's perfectly fine. So whenever if you get the property like on the contract, just during your inspection period is send a contractor or send an appraiser to check it out for you to see what the estimates
Sure.
might be for that. So especially being like an older home, yeah, you're definitely gonna need a thorough inspection on it. Make sure that the biggest things are gonna be the foundation on older homes like that. Also termites or mold and piping. Those are going to be the four major ones with whenever you're coming across properties that are less than 1930s or even 1940s as well too. Those are going to be the four major found problems that you're going to come across on those older homes. Just
So
because
you mentioned termite, pipe, and what else?
so mold, termites,
What?
foundation, and then pipes or
Pipe.
yeah, all the plumbing.
Yes, yeah. So it's stuff. Another problem this market has. Usually, these houses in this area for Section 8,
Hmm.
and when they move, in order to get the Section 8, city puts you on 60 days approval. So your house is vacant for 60 days.
Yeah, yeah. It's
I
just
went to the city and checked their regulations,
yeah.
and the agent confirmed that.
Yeah, that's the only thing with Section 8. They have to make sure that the property is conditioned. It's like very thoroughly. It's they have like their criteria on what they need. So that's the only thing that about Section 8. But it has its pros and cons. Pros, it's on the rental side, and the cons is the process of it, the condition of the property, and also the screening of the tenants as well too. Because sometimes Section 8, they could be saying two people, but the whole family of 6 and 8 ended up moving into like the property, and now it's like that's being under rented at that point.
Thank you. Thank you.
Yeah, of course, my pleasure. But hey, hopefully you're able to get the deal out of that one though, because that's a great property as well too. So that's why, like I said, I like to be aggressive on my offers. So I'm not even scared of bringing an offer of $80,000 just because, hey, I want to make sure that the property cash flows a good amount, but
Sure.
also playing it safe as well too, especially on these markets. Like I said, I know these markets as well too. They're if the property's cap rate is already high, I can push it even higher. And especially, I don't care if it's listed a day ago, or an hour ago, or 100 days ago. I'm gonna be very aggressive on my offers, just because again, if I put myself as the actual investor and the buyer, which I always do in any single property I analyze, I always consider it playing it the safest that I can. And from my experience of doing a lot of deals and just analyzing deals and going through closers, throwing through inspections, it always comes across that always something unexpected or that extra expense is always going to be popping up, and that's where I have to make sure that the deal makes sense for me. So whenever I work with agents or sellers directly, I always like to let them know off the bat, I might not be the best fit, but let me give it a shot. Let me do my due diligence. Let me find out what the numbers say, because I'm a numbers guy. And if the numbers make sense for me, I'll bring an offer in. If it doesn't make sense for me, then I'll let you know and I'll move on to like something else, just because I don't want to waste anybody's time whatsoever. But if I
You came up with it 80,000 based on 20% of the, how much was that, the cap rate?
no, that was it was at a 9%. I went up to a 13% cap rate.
Oh, 13%.
30%, yeah. So 30% cap rate, all the expenses are already paid for. The debt service or the mortgage already included in there as well too. So buying around $83,000, 30% cap rate, it brings a cash flow of $4,500. If that's renting it out at 750. Now, if you do Section 8, I don't know what Section 8 will be for this area. It's usually like 20% more, so I'm estimating $900 to like $1,100 on the Section
No,
8.
can I interrupt you? the guy is saying in a property detail 750, so it brings 1,500.
So it was right. So I was
Yeah,
right.
you're great.
Oh,
So 1,500.
all
So
right,
so
yeah.
if I pay by cash, I need to take a 18% from 80,000 as a discount.
No, so the 80,000, it's already like the cash offer.
Cash offer.
Yeah, so the $120,000 price point minus like the 18%, that would have been like $98,000 in the cash offer. But
Yeah.
again, I'm playing it more aggressive than that. So I'm adding especially around this area and the property's condition, the property's current cap rate being high already, I'm gonna push it even more. So that's where I'm gonna add another close to like 15% on that whatsoever. So that's, like I said, it's close to like getting a 30 what was it, like a 30% discount, what it was, and that's a cash offer on that deal.
Okay. Thank you.
So I get that. Those are my numbers, and if I was right on the rent and the rent estimates on a current market, then you're golden. Because 80,000, even if you buy it close to like $100,000, the property still cash flows. So again, I think $100,000 was like 10 or 11%.
Yeah.
But that's still pretty good because again, a 10-11% with all expenses paid, all the mortgage already covered, and you still bring in some cash. That's cool. You can pay off either your loan faster, or you can use the cash flow within the next 3 years, save all that cash flow, and then buy another property and do it all over again.
The things is bothering me, lead certification. I need to find out how much it is, because if it is $30,000, already I'm paying 30,000 on top of everything.
You said the lead certification?
Yeah, these houses, because before 1970s, the house is 1910. So paint and lead, it was the problem. City is pushing you to get the lead certification.
Yeah. Okay. I see.
So that's 2030. I need to find out. So that is going to eat from my profit right away.
Yeah, yeah. Yeah, so it all depends like on the strategy. So if you're looking long term, I mean, long term it does pay off. But again, that's why I like to go aggressive. So the $80,000 honestly makes a lot of sense, but it all depends on the lead certification as well too for that property. And especially there's a lack of information as well too from the seller and the agent. So that makes it a little bit more challenging. So it's just the strategy. It has to work really well where it's more inclining towards like Section 8, where pay for the lead, but then the income on the property is not going to be way higher than anticipated because it's going to take a little bit longer, yes, but then it's going to bring you more cash flow into it, so that way you're able to make up what you from the initial investment that you bought into like the property from there.
Thank you.
So it's a numbers game, basically. So it's just a numbers game. It just has to make sense for yourself or for your end buyer, whoever you're getting like the property for, and it just really has to make sense. But other than that, it's just work on the numbers because again, it's a rental property, so it has to really make enough sense. So again, play it aggressive, in my opinion. And if they don't accept the offer, play the waiting game. Give them 2 weeks. If 2 weeks they're already dropping the price, then that gives you like a signal that the seller's motivated, and now you can bring a lower offer because hey, they made a price adjustment. I'm gonna make a price adjustment on my offer as well too.
Exactly. Great. Thank you.
So
That's the best strategy. I appreciate it.
yeah. So
Thank
again,
you.
if it doesn't make sense, just try to find other opportunities as well too. Don't
Yeah, always.
hold on to one. Again, it's just part of the process of analyzing deals. Because one is one and done. It's not our reality. Occasionally, occasionally like a blue moon, you might have a deal like that, but most of the time, it's not going to be like that.
Thank you.
Of course, my pleasure.
Wonderful.
If you have any questions, definitely let me know. But I don't know anybody else has any other questions whatsoever. Oh, where's this little thing? Oh, there you guys are. All right, let me drag here. No more questions? Anybody else?
The last question,
Oh, yeah.
sorry. For me, was very surprising. You went to Bakersfield. For me, Bakersfield is very expensive and the cap rate is low. But it looks that when you are doing fix and sell, flipping,
Fix and
it
flip,
makes
yeah.
sense because when the price is high,
Yeah.
you buy it by discount and improve it, you are going to sell. This is
Yeah.
not a rental you are keeping for a long time.
No.
So I learned this lesson.
So yeah, so again, it just depends like on the properties. Properties vary on are always gonna be varying. It really depends on it. But if you know like your stuff and then you have a contractor as well too that just knows like their stuff, it brings a huge amount of value. So not only it brings the so this is what I always like to do is whenever a property like that, whenever I find a comp that recently sold for that much, what that's going to do is going to motivate other homeowners to possibly want to sell. So this to me, if that recently sold in January, that's going to be a hot market for other homeowners to be interested on selling their properties as well too. And that's how you're able to find off-market properties. So the example that was given to us was already an off-market property, but if that one doesn't work, it's all about continue looking for other properties within the same area because that's already a hot area on itself where investors are overpaying, but the repairs and the updates that they're doing are so exceptionally good and amazing that it brings a huge amount of opportunity for the property and for the investor as well too, the fix and flipper, that they just want to continue doing deals on that area. So for me right now, that's a hot area where that property was located. It's really an amazing area to look for other sellers that are going to be motivated. But that's usually in any area whatsoever that I come across because that's what it usually does to like the areas. And it's a domino effect where if somebody sees that that property sold, hey, how much is my property sold? And they try to find out professionals or they fill out forms so that way they can get in touch with somebody who can let them know how much the property is worth or how much it can sell. Or if they come across an investor that they ended up reaching out to, and then that investor tells them, well, I buy properties, like how much you want to sell your property for, then that opens up opportunities. So that area overall is just like a hot area. But that's how Bakersfield it is. Properties can definitely be cheap. And if the right work can be done, it can definitely bring a good amount of profit as well too.
But I know my limitations. This is the stuff for you. I consider rentals for long term be having a bachelor's.
Mhm.
Fix and flipper is like a PhD guy. It's much more complicated.
Oh
First,
yeah,
you should know the price of the house. Second, how much it takes to repair it. Third, you need to have a contractors to do that. And
yeah,
fourth, you should know how much is after repair you can sell it. That's a PhD.
yeah, yeah. So
Uh,
again,
I am not on that level.
yeah, that's why I give it props on fix and flippers. The ones that do amazing work, they're amazing. They know like the stuff and
Yeah,
they work on everything so smooth for them. So they each have to about bring in the right opportunity for them that best fits them. They'll get the work done. And
yeah.
so yeah, uh,
Thank you. I
of
took
course,
your time a
my
lot.
my
And
pleasure, my
Sarah's
pleasure.
time as well. Thank you.
Thank
Thanks
you.
to everybody.
Well,
I
yeah,
appreciate
I'll wrap it up around that because yeah,
it. Thank you.
we did go over a few
Have
more
a nice
hours.
day.
The recording will be available if you guys want to go back to it one more time on the meetup.com. It'll be available on the comments. But other than that, if there's no other questions, I really thank you guys for all the information, for sharing some properties. And the next event will be on Wednesday at 6 p.m. Pacific Standard Time. So
Thank
thank you
you.
guys, and you have a blessed night. And take care.
Take care. Bye.